All attendees are in listen-only mode.
Good morning, everyone. This is Mark Raymakers here with Insurance Agency Marketing Services. I want to thank you for taking time to join us here this morning on our webinar. This particular webinar is also often referred to as a Roth IRA, so you're in the right place if that's what you're looking to attend here this morning. This is a recorded webinar, and we'll make this available to you after the event here. So if you want to take a look at it, speak with someone in life marketing, answer or ask any questions, we certainly do have an answer. And this is something that has been around for quite some time. You've probably heard of Patrick Kelly. He'd written a book years ago on tax-free retirement. And Doug Warren also had written one, Index Universal Life Unleashed, talking about the power of Index Universal Life and how it's such a great product to be used for an alternative for retirement planning. So this morning, we're going to go through a number of different things here. I'm going to tell you a little bit about us. I'm going to also allow you the opportunity to ask any questions as we go. Of course, if you like, we can certainly discuss those offline one-on-one. So whatever option you choose to go with, we're certainly happy with that. So let's go ahead and let's dive right into a couple things we got going on that I think are of great interest and value to you. First off, what we have is our Life and Annuity Training Academy. This is something that's been very, very successful for agents that attend. It really has helped turn some careers around and given agents a great sales track to run on. We go through a number of different things. And what I'm going to do here real quick is I'm going to put a poll out there for you. And all I ask that you do is if you're interested in knowing more, interested in potentially attending the event, if you mark yes, what we'll do is we'll email you an application and an agenda, giving an idea what we're going to be covering exactly. But we're going to have our next and final for the year, I believe, will be in September. And we have speakers come in from across the country. And the nice thing about it is they do just exactly what you do. Some of them will be agents in the field. They're going to share some of their best sales and marketing ideas, and they'll show you the presentation. We'll talk a little bit about product. This is not a product training. This is more about growing your business on the life and or annuity side. And what we do is we pay for your airfare to come out. So there's one thing. We've got your airfare covered. We pay for your airfare to come out on a Wednesday. We do a few short presentations Wednesday. And of course, we feed you, so we cover your meals as well. And in addition to that, we do a full day of training on Thursday, a half a day training on Friday, and then we send you on your way. And here's the last thing. We do cover your lodging as well. So not only is your airfare, your meals, and your lodging covered, all the expenses are basically provided by IAMS. And if you're not getting free training like that today, I would certainly encourage you to do that. What I've found being in this business as long as I have, most of the agents out there that are so successful are constantly investing in themselves by learning more. And you really can't say that, I just can't afford to be out of the office. So many times what happens is that 3 days away is enough to make a career-changing decision. So certainly keep that in mind. Doesn't look like we're getting a whole lot of response here. So maybe the timing's bad. Maybe I'm just not explaining this very well. But the important thing is it's free training, and we cover those expenses. So if you're looking to grow your life business or your annuity business, this is an opportunity for you to do it, and we pay the expenses for you to do so. Of course, you'd need to be contracted with us to attend the event, and that's pretty simple. We make it really easy with our paperless contracting. All right, I'm going to go ahead and close the poll. If you change your mind and you want to attend the event in September, I believe it's the third week of September, by the way, you can certainly give us a call here, and we'll go ahead and we'll get you everything emailed out to you. And just because you say yes doesn't mean that you necessarily have to or will be attending the event. It's just a matter of expressing the interest. And we do have them next year as well. We generally do 3 to 4 of these a year. So, okay, let's go ahead and move on. We have a new producer bonus. So for those of you that decide to go ahead and get appointed with us today, or obviously in the very near future, what we do is we will reward you based on your production at 3 different levels. And if you see the 100,000 level, that's usually dollar for annuity or single premium life. And then it's a fraction or percentage for traditional target life premium. So let's say you write 100,000 At that level, you can choose between a $750 in cash or to your subscription to our website newsletter service. So what we do is we basically set you up for your own website. And Matt Neal, who put this webinar together, looks like he's hosting. Actually, my name is Mark Raymakers, not Matt Neal, but Matt would be the individual you'd want to call, and he could get your website up and running in as little as one business day. He's done tons of these, and I tell you what, he does a phenomenal job. So you could either earn it or buy it. Finally, if you want, you can get an iPad free. So either one of those three you could choose from, or you might want to wait till you get to the 300,000 level where you have some other options that'll grow your business through the full Social Security program in the 3,000 piece postcard mailing. That's been real popular. And you may have done that. You may have seen that, maybe in advertisements or radios out there. But this is a big thing. There's a lot of seniors retiring and they want to know about Social Security. This is an opportunity for you to sit down and understand Social Security and help them to reposition assets so they're ready for a comfortable retirement. If you choose not to do that, there's $2,000 in matching marketing money you can use to promote your business in any way, or then there's finally the gift card. The last level is the 500,000 level. Maybe you're good at speaking in front of people, and maybe you've done seminars in the past. They haven't worked, but you'd like to maybe restart that engine. Well, this is a great way to do it. You can either take advantage of Matt Gill with his 5,000 piece mailing and seminar coaching, or Dave Pimper with his 4,000 piece mailing and seminar coaching. These gentlemen are both really good at what they do. And by the way, they're at the Academy, so they will be showing you their presentation. And these gentlemen have both qualified for our trips, multiple trips. In fact, I think up to 5 trips in 1 year just based on their production. So if you want to do seminars, those are 2 great options. If you choose not to do either, finally, there's the Ritz-Carlton Travel Rewards. Make your own personal vacation getaway. Okay, our website out there, just real quick, if you haven't seen it, it's www.imzinc.com. Everything you could possibly imagine is out there on the website. We want to make it easy for you. We want to make it accessible, so whenever you're in a situation you might need a quote, whether it's a life quote, annuity quote, a form, it's all available to you out there on the website. So certainly take a minute and visit that. Okay, another thing, I believe this is the last slide before we jump in. It's a referred producer program. So obviously, just like you, we like referrals. And if you refer an agent to us, what we do is we send you a check for $50 once we receive their contract, their first contract. And then every time they write a piece of business, we would give you 20 basis points on what they write. So for example, if you had 3 producers that wrote maybe $1 million in annuities or combination annuities, single premium life, traditional life, that's like $6,000 in cash for you. And so if you're doing business with us now and you like what you see, you like the way you're treated, we'd certainly appreciate a referral, and that's how we would financially compensate you for that. And there's no commission cut for you or the agent that you would refer to us. And then lastly, here's something that our agents really appreciate. This is the market reimbursement. If there's one thing you pull from these things about IAMS, I think this is probably one of the greatest. If you look at the fact that marketing today is very expensive, and I hear all the time the agents are buying leads, and wouldn't it be nice if that lead cost for you or whatever your marketing expenses were cut in half? That's theoretically what we're doing here. So let's say you write $100,000 in annuities, single premium life, again, dollar for dollar, or let's say like $10,000 in target life premium. We put $200 in a marketing reimbursement account for you. At the end of the month, if you are hosting seminars or you're buying leads, we will reimburse you up to 50% of what your expense is, as long as you have that in your account. So let's say you spend $1,000. Send us a receipt. We'll turn around and send you a check for $500. So 50% of your expense has been absorbed by working with us. And a lot of agents forget about that we have that reimbursement, but this is an opportunity for you, I believe, to really get some help in your business. It's tough out there. And in addition to your commission, this is what we'll do for you. Okay. All right, let's go ahead. Had a question here. Okay, so here's what we're going to cover this morning. And I'm going to tell you something this real quick, because a lot of times I think what happens is as advisors, you're looking at this and you're going, this is so elementary, But what I want to do is I want to explain to you how you should consider explaining it to a prospect, because that's really who you're selling to. It's not yourself. I mean, obviously you understand it, but you need to be able to explain it. I personally sell these. I'm going to let the cat out of the bag. I've worked with doctors in the past, and I'll explain later why that is. But just looking at some of the from a simplistic standpoint, we need to make sure that they understand And that's what we're going to do this morning. So look at it that way with me here today, so you understand this is how we want to explain it to a client or a prospect. So what we're going to do is we're going to look at this is the tax-free retirement unraveled. There's some things we're going to look at: logical investment order. We're going to look at investment options, tax awareness, the ultimate tax-free solution, and who we really want to prospect to, and what are the qualification guidelines. We'll look at some design features and a simple call to action. I think it's important you're taking time here this morning, so let's make sure that we're doing what we can do to take full advantage of the time that we spend here today. So, all right, let's look at the first thing. And some of the stuff I'll tell you, I've taken from the books, the Patrick Kelly, the Doug Warren that I've mentioned. And so if you've read the book, this stuff should sound pretty familiar. If not, well, then you'll know where to go if you wanted to look at it a little bit more intricate details. So first of all, it's recommended that when you're visiting with a prospect or a client that you tell them to take full advantage of the free money that employers are providing to them through matching 401k. It just doesn't make sense not to take care of that free money and take advantage of that. So that's the first thing. The next thing is, obviously, when we're planning for retirement, we want our clients to understand that what we put aside for retirement may or may not be fully taxable. And our first option here, obviously, is a Roth IRA. If our clients can, let's get them in a Roth IRA because, obviously, when they retire, they can take advantage of tax-free distributions one day. The next thing that we would want to consider after we've done those two things is look at the tax-deferred money. So, like annuities, traditional IRAs, 401ks, things like that. Now, there's some argument out there, and I'm not going to certainly go into the arguments about whether or not you should put money into 401ks, etc. But in the logical investment order, here's how we want to explain it to our clients so that they understand. And when you talk to some of your clients, you're going to find out that they're frustrated because a lot of these options are unavailable to them, or they're convoluted and complicated. And so then the next thing would be the taxable dollars. So once your clients taking advantage of the opportunity to defer funds until retirement, look at different things. Every other investment that earns interest or grows in value. So once they understand that, I think it makes it a little bit easier. We're painting a picture for them as we get to what is the best Roth IRA alternative. So what are the investment options out there? Well, there's a lot of them, but let's just keep it simple. CDs, I don't know how you can consider a CD an investment option anymore because they're so poor. They can't keep up with inflation. The taxability on those is really quite pathetic. We look at stocks, bonds, mutual funds, annuities, qualified accounts like our 401ks, our SEPs, our pensions, etc. There's the IRAs, the Roth IRAs, and lastly, we put life insurance in that category. And we do want to throw that out there for them because we want to get them thinking about where we're driving this sale, where we're driving this opportunity. Years ago, and I'm sure there's a lot of you that have been in this business longer than I have, but if you look at it years ago, life insurance was never really designed to be an investment. And so products have changed, and clients are so familiar with whole life, they're so familiar with term, but they're not familiar with what we have available today, what we know. And so we're trying to, again, this is painting the picture. Let's think of life insurance as an option or an alternative for retirement. Let's make them aware of tax awareness. So it's important for our clients to understand tax qualified plans and the penalties that are involved. And this is important, and you'll see why in a minute. But obviously, if our clients understand that if they take an early withdrawal prior to 59 and a half, there's a 10% IRS penalty. So now we've got this loophole that we have to make sure that we keep an eye on, that we don't touch those funds any sooner than 59 and a half. Income taxes are due on all payments. So even though it's a good idea to defer, once they retire, they know they're going to be paying taxes on 100% of those qualified funds. If they put money in mutual funds and stocks and real estate and things like that, obviously there's capital gains and there's growth on that profit, which this is America. We pay taxes on growth on our money. And obviously that was one of the last items in our logical investment order once they've satisfied all those others. Here's something else to point out: RMDs, required minimum distributions. Your client says, we all know, must withdraw at 70 and a half, and they'll pay ordinary income tax on that. I would say that most of our clients probably understand that, but unfortunately in my seat, I've seen clients that are 72 and they've never touched their RMDs at all. So good opportunity for us to go back and talk with them. Failure to withdraw or not withdraw enough can also result in an excise tax. So it's important that they understand that as well. So for those clients, like I said, that sat there and did nothing, there is definitely a slap on the hands for that. So what's tax-free? Doesn't look like there's a whole lot of options out there. Municipal bonds, Roth IRAs, and lastly, again, life insurance. We're painting that picture for them. Now we're keeping them thinking, what in the world? How could life insurance do that? But we're going to talk about that. Okay. I had a question if these slides can be made available. I could probably help you with some of those. Okay, so, all right, so let's look at the ultimate tax-free solution. And if you remembered, I tried to paint some of these different things out there that are caveats, or they're little roadblocks along the way as far as qualified plans, etc. So the ultimate tax-free solution should provide us some growth of principal. If it's not, then really is it an investment? Your money needs to work hard for you one way or another. We also want to be able to preserve the asset that we've put aside. Wouldn't it be nice, though, too, if our ultimate tax-free solution didn't require us to take any required minimum distributions? How about the fact that if we could put our money somewhere where there's no penalties for early withdrawal? That'd be really nice, because what if something happens in our life prior to 59 and a half and we really need to get at some of those funds? Going to our qualified accounts can be costly. Tax deferral on accumulation, indefinitely. There's another nice thing. Wouldn't it be nice if you could just let it grow until you needed it? And if you didn't need it, well, there's nothing lost. Tax-free income via loans. So I think you're seeing here how we're showing them these are some of the options of life insurance, and that's really what we're painting for them. We're trying to get them to get excited about this particular plan through some of the loopholes that we don't have to jump through qualified plans. But tax-free income via loans, that's how we want to set this up. We're going to show them how they can take money out of something in the loan fashion without having to pay taxes on it. There's no age restrictions up to age 85, and I say that because most of these products issue up to age 85, and there's no contribution limits. Now, we know that there are limits out there today as far as how much we can put into the different plans out there, but as we know, some of our clients or our prospects that we run into are going to have a lot of money. And so they're going to run into some of these roadblocks, but there is no contribution limits. You might be thinking, well, what about MEX? Well, we're going to avoid MEX, and I'll show you how we do that here in just a minute. Tax-free benefit to heirs at death. That's the other thing. As I mentioned, if you let this accumulate indefinitely and your client never touches those funds and they pass away, it all goes tax-free to beneficiaries. We know that's not the case on qualified accounts. That's a ticking time bomb for beneficiaries. And here's the nice thing too, there's no reporting to the IRS. You don't have to worry about being over or under or taking too much money out, or I should say taking money out before 59 and a half and not taking out at 70 and a half. And so all those things. So what do we want to look at for qualification? It's important that the prospects or the clients that we're talking to can qualify. First of all, they have to be insurable for the strategy to work. I have worked with some clients that are rated substantially high. Table 5s, Table 6s, I think may have been one of the highest, but this person was flush with cash. And even at a high table rating, it still worked for them. Obviously, they must have ample funds available in order for the plan to work. Now, we've used some for younger people, $100 a month, and it does provide for some pretty decent dollars later on down the road. But bottom line is, if they don't have the money to put into it, it's not necessarily going to be very appealing. They should have a lengthy time horizon as well. Now, I've used clients age 55 before. I've used them age 60, where the plan is they don't take any money out until maybe they're 70 or 75. We want to get that close to the tail end of the surrender charges on the life insurance contract. But the longer time they have for that money to cook, so to speak, or sit there and become fat, we want a long time horizon if we can get it. And really, I think it's good up to ages 65. Again, I think that's probably one of the oldest ages that I've ran it at. They had a lot of longevity and really hadn't planned to touch the money so much until maybe 15, 20 years out. But here's the other thing. We set this up as a long-term care alternative as well. So maybe keep that in mind. Okay, so what do we want to do with the design features of this product? Because it really comes down to how it's designed in the illustration. We're not doing any smoke and mirrors, I'll tell you that. But what we're looking at here for this is an index product. Some of you may have attended our webinars here in the past on using whole life insurance, maybe on a different concept. But when we're doing this, this truly is established for the longevity effect, using it for retirement, not being your banker. Okay. The next thing we're going to do most commonly is run an option 2 increasing death benefit. It doesn't always work best, but what I'll do is I'll run option 1 and option 2 just to show you the differences so that you can see, yeah, this does make the most sense. And what we do is when we run option 2, we run the minimum death benefit. And the reason for that is we want the lowest amount of dollars that are put into the contract to go for mortality, and yet have the maximum amount go into the index option that we choose. And we're going to avoid a MEC. We're going to tell the computer when we're running the illustration, we do not want a MEC. Now, here's another argument I've heard. I have heard agents say before, what's the big difference if it's a MEC? So they're paying taxes on the growth. The positive thing is if they pass away, they have a tax-free death benefit. There's truth to that, but it really kind of changes our whole presentation as far as us showing them a retirement plan that's tax-free. We also want to do, when it comes time to trigger an income, we want to do loans versus withdrawals. Obviously, withdrawals will trigger a taxable event over and above the cost basis of the policy. And another benefit you can put on there, there's 2 of them. Waiver of specified premium. So if your client is concerned about being disabled, we can put a rider on the policy that would cover the cost of their premium to keep this plan going until they're back on their feet. There's also a life protector rider. Companies have a little bit different names for that. But what would happen is if we're in a continuous down market and we're unable to continue to take a loan out for the value that we originally anticipated, what would happen is the cash value would be lower and potentially cause the policy to take an early lapse. This rider would be exercised to keep the policy in force. And that's important because if that policy should lapse, they would then pay taxes on the growth over and above their cost basis. So we're going to keep an eye on that as well. All right, so here's what I did. Here's a quick example, and we got a number of different carriers we can use this with. I use, in this case, the Omega Builder IUL product with Minnesota Life, 35-year-old male preferred non-tobacco. There's also different products that we run, but just for the heck of it, today is what we're using. We're doing a $500 a month to age 65, guaranteed interest rate is 2%, assumed rate is 7%. We're just using a one-year point-to-point strategy, and most of the illustrations we run are in a one-year point-to-point. We do have some agents that manage money, and they like to use different options as well, so you can certainly do that. But all I'm doing here this morning is just showing you an example of what happens, okay? So you'll notice that we have the $6,000 premium outlay starting at age 35, and you can see over here what we've got for the death benefit. And you notice again that is, as I mentioned, it is an increasing option, minimum death benefit. And obviously this can affect target as well. Obviously that's based on death benefit, but you really want this thing to sizzle. And so that's what we're doing here. We wanted a good cash accumulation for retirement. So what I've done is I've showed discontinuation of premiums at age 64. You can see our death benefit over here, pretty healthy. And now what I've done is I have changed the option from an option 2 to an option 1. The reason is now what we want to do is, again, we're going to control those mortality costs, because if we let that increasing, that's going to eat away at that cash value a lot faster. Then we've taken out a $69,000 loan every year starting at age 65, and this is tax-free, $69,282, and we're running this all the way to age 90, okay? So when you do the math, I should have this broken out for you here, they're taking out substantially more money than what they put into the contract each year. And the nice thing too is obviously if they pass away, there is the tax-free death benefit over here as well. So it really is a beautiful thing to do for them. If you look at the net outlay here, they put in $180,000 in this particular situation. They've taken out a net of $1.6 million, and that's tax-free. That's a big deal. And so again, if you've got a young, successful professional client that's looking for an alternative, this works very, very well. Okay, so who's a prospect? Who might you want to consider? Now, there's probably a lot of people that you'd consider as a prospect, But what I would like to think of first of all is prospects that are ineligible for Roth IRA. And again, the first thing that comes to mind is first one I wrote was on a doctor, and she and I had a conversation about her retirement, and it was quite interesting because she said, I'm just frustrated. I just don't have places I can put my money, and everything I'm going to be taking out is going to be just taxed to the hilt when I retire someday. And I mentioned this to her and went through it, and it just all seemed to make sense. So when they hit a certain income level, obviously we run into a Roth IRA issue. Prospects that have maximized contributions to their qualified plans and they still have money left over. I don't know if you remember those days when you're putting money aside and you didn't have kids and you had more money than you had time. And so that is another situation. If there's clients out there, they've maxed their contributions out to qualified plans and they want to put money somewhere else, so they're not looking at so much taxability when they retire. Prospects in top tax brackets, obviously, you should know who those are that you're working with today. And you might be working in the senior market where a lot of those clients just aren't a good fit for this. But I always say, if you haven't met your clients' children, you need to, because the day is going to come when you're probably going to be delivering a death claim check to them once your senior clients have passed away. So why not meet them now? Why not see what you can do to help them? This looks like this probably needs to be updated here. Doctors or those earning over $177,000, married filing jointly. Here's the other thing too that I like to mention is that obviously when doctors have gone through all of their education, they're gonna land a deal, they're gonna make a bunch of money, but now they've got all these loans they have to pay, and this is one way to help cover those loans. As you can certainly imagine, they can use those tax-free dollars if they pass away with those large loans, and a lot of them get married, and so this is a great way to cover that. Again, they're also ineligible for a Roth IRA generally because of the income levels they're at. They also have limited time and knowledge of investment options, and it's interesting because obviously a lot of us have probably spoke with doctors before and they seem to have the answer for everything, but realistically they don't know more than likely as much as we would know, I would certainly hope, when it comes to investment options. And going through this with them really can be an eye-opener for them, and it benefits them in many, many ways. Another thing to think about too is small business owners, and this is one that I really like to kind of drill down on as well, because as you know, when there's a small business that's getting started out, money's pretty tight. Their dream is in their business, and so they've gone out and they've taken loans as much as they can possibly borrow from the bank to get their business up and running. They would really rather prefer a non-qualified plan. They know that they need to set something up. They know that it's probably going to be a while before their business is really turning and burning and they're doing, just great profits. But it's still important that they plan. And so by showing them one of these plans, they don't have to worry about following the IRS guidelines as far as making it available to other employees. So they can set this up for themselves. If they pass away, they can use it for loans. Banks like to see that there is something out there, obviously, as we all know. But having that non-qualified plan for themselves that they can use one day is certainly attractive. Also, there's that instant liquidity through the cash accumulation should they need it. Worse things have happened where they've had to borrow money because they needed something else to add to their business, and the banks have just put the kibosh on borrowing any more loans, so to speak. So, and collateral for loans. So those are some nice things to think about. So I guess some things that you might want to consider, just a call to action, is look through those client files. You might have clients that you know of that might be middle-aged, that they still have time that they could make this work. They're making enough money to where they run into the roadblocks. Where else do they go? You might also want to consider checking the newspaper. Newspaper, obviously, grand openings, new businesses, things like that, like I just mentioned to you, as far as going out to those businesses and congratulating them and asking them who's taking care of their benefit plans, or however you want to do that. And check the Better Business Bureau as well. You'll see some new businesses out there that maybe have started to see that incline in their business. Things are going well. Obviously, if they're if they don't have a plan set up for themselves now, they could certainly do that with this. But on the other hand, too, if they're doing well enough, they could probably set up a plan where you can help them for all the employees. So just a quick thought for you there. And then call us here. We run these quotes every day. And I say we do a pretty darn good job, but we've got some great companies that are competitive. and pay nice commissions. Again, since we run these quotes all the time, it makes it easy. You tell us what your client is, we'll ask you the right questions. Again, pre-qualify your prospects or clients, and then we're going to run that tax-free retirement illustration for you, and we'll look at some different options. The other thing that we do, once you write a case, we take it from there. There's nothing else for you to do. We order your exams for you. We provide you the weekly status update, so you don't have to pick up the phone and call and ask what's happening. We do that through email, through phone calls, so each week you're brought up to date with what's going on. Our goal is to get your cases issued and paid as quickly as possible, and if they come back different in underwriting, we've got a great team that is rewarded based on the success of getting the cases issued and paid. So it's a very important part of their day, their income, to get these cases paid for you. So they're working hard for you, I can tell you that. And again, providing the marketing reimbursement. As you write these cases and you're looking at growing your business through marketing or whatever it would be, we're going to provide you that 50% reimbursement on your expenses. Okay, so that concludes the webinar this morning. I don't know if there's any questions out there. If you do, you can certainly call our office. You can ask for anyone in life marketing. And you can tell them that you're on the webinar this morning, that you have I guess you could refer to it as a Roth IRA Alternative, and they'll ask you the right questions and they'll get something out to you here. So, okay. Gary, I'm glad to hear this worked out for you. This is, again, they pay well. Realistically, if you've got clients that have the dollars, they're going to reward you financially very well, obviously. But I think the other important thing is knowing that your clients have an alternative that's going to help them from a retirement standpoint. It's fortunately for us, we see a lot of things in our seat, and we do see a lot of clients that have put everything that they have in qualified accounts. And so in the end, what happens is they're taxed to death when they retire. And this is just a great way, I think, for them to set up something as an alternative, and it works in a multitude of different ways. Okay, so yeah, you are definitely in the right business for what you're saying here as far as the different markets that you're in. We did one of these for a chiropractor here in town, and it was the largest life sale that this agent had ever made. And she had a ton of money, and she just ran out of options. And this guy was an annuity producer. And so he says, gosh, she's just being taxed to death. We just need to help her out when she retires. So that's what we did. Worked out great. Okay. Let's see here. Joe, we can talk about, print out the question. Yeah, we could probably, I can put together some of these slides for you if it would help you in the presentation process. How about Northern Virginia? Well, we do these in 50 states. So if you're wondering whether or not you can do this in your state, yes, you can. Obviously, we just need to make sure that the product is available where you are, where you're domiciled, or even not. We do a lot of business for agents that are domiciled in one state but do something in another state. So. Okay, let's see here. I'm going to read this question real quick here. Okay, so Jerry, what we can do is on this 403B client that you're working with, I would recommend that you call in. And, we do some stuff with the 403B market. And obviously, it can be pretty difficult, but we do have some alternatives that we can discuss with you. So I would certainly, when you have a moment here today, if it's convenient, call and ask for, you might want to start first with our annuity department on that particular situation and see what alternatives they have where they can get you some growth. Unfortunately, annuity rates just haven't been what they haven't been what I'm having a hard time getting this out, can you tell? They aren't what they used to be. So everybody's struggling with the interest rates right now. And so, we can certainly look at that. The problem is with the 403B, obviously depending on the age of the client, we have some tax issues to deal with, and we can certainly discuss that. And one last thing I want to say here real quick too is We have an alternative when you have a lump sum of money. Your client might inherit some money. We've had that before. We set these up in these Roth IRA alternatives. But we have a way where we can put these into a life plan without creating a MEC. And so if you have clients that have inherited money and they want to do something different with it, we have a solution for you on that, and it works out pretty slick. So maybe keep that in mind. Okay, so it looks like the question box is empty. I want to thank you for taking time here this morning. Again, please call our office, and you can ask for anyone in life marketing, and they will be ready, willing, and able to help you with your next case. So have yourself a great week. Thanks for your time here today, and look forward to talking with you here in the very near future. Thank you.